the speculators who came late to the market, who really didn't understand the trends, didn't understand why things were happening, but jumped on board anyway and did it with a lot of leverage. I think they're all flush from the market, and I think we're going to be able to resume the trends that were in place before the leverage speculators came on board. And I think ultimately we're going to have much bigger rises before they come back, if they even have the ability to come back, because they might have wiped themselves out on margin. I mean, that's one of the fortunate things about my clients. Even though some of my clients, and we have losses and some substantial losses, they're not on margin, so nobody is getting forced out. No one is having to sell into this insane market. No one is having to accept 2 or 3 or 4 times earnings for their stock. No one's having to give away these stocks at these huge dividend yields. We're able to ride out the volatility, whereas a lot of the leverage players were not able to do that. I mean, they were just forced out of the market. Anyway, so let me quickly talk a little bit about what's going on, in the economy before I grab the phones. First of all, the bond market, it's very interesting. If you look at the yield on the bond market, bond prices have been falling every day so far for 2009. In fact, if you look at the bond market, the yield on the 30-year bond has moved up from 2.5% in late December to, I think, 3.7% now. This is already the worst year in history for bonds, worst year, even though we're only through the month of January. So the January was a worse year by itself than any other entire year, January through December. And the momentum seems pretty solid. I mean, if we can get back up above 4%, 4.25% in the next month or so, then I think we can get up to 5.5%. And that's going to throw a monkey wrench into the idea that we can get, mortgages down to 4%, which is something that Obama, I think, has been floating around. But I think that's a sign that things are going to start to go the other way. Look at the price of gold, continues to move up, $900 an ounce. The Dow this week hit another record low in terms of gold. The Dow got down to 8.7 ounces of gold. I think it closed today at 9 ounces of gold. But again, this is another one of the forecasts that I've been talking about, how the U.S. stocks would continue to lose value relative to gold. Meanwhile, I have noticed that the foreign stocks have picked up, even though the U.S. market is pretty much on a new low right now. It's not an intraday low, but it's pretty close to a closing low. Most of the foreign markets are quite a bit off their lows, at least 10 to 20% off their lows, even though the U.S. market seems to be making new lows. And the dollar is still relatively high compared to where it was at the lows, but it's not making new highs. And to me, it looks like there's a good chance that the dollar is consolidating and looking to roll over and move back down the new lows. That it's kind of, we had this big, huge rise in the dollar, then we had a big, sharp drop, and now we're having a rise, but we're not able to get back up to the old highs. And I think once this fails, if this is going to be a failure, if the dollar can't make a new high, then I think it'll make a new low. And when it makes a new low, I don't think there's a lot below it. I think it could be a very, very sharp and rapid decline, which is, one of the reasons that we want to act as quickly as we can to take advantage not only of the strength of the dollar, which I think is very, very temporary, but the bargains in foreign stocks. And, when you've got an artificially high dollar for whatever reason and stocks at fire sale prices around the world, you win twice because you get to take overvalued dollars and buy undervalued stocks. And that's what people should be doing, and doing it as quickly as they can, because we don't know for sure when the bargains are going to be over. All I know is that they will be at one point, and I think a lot of people are going to have a lot of regrets with respect to the stocks that they didn't buy or the positions that they didn't average into when they had the opportunity. But generally, when there is an opportunity to buy something cheap, a lot of people have a hard time doing it, because the reason it's cheap is because there's a lot of fear. Oftentimes the fear is irrational, but it certainly doesn't feel that way. And, so they say it's always, it's difficult. It's always difficult to buy low and sell high, because when you're buying low, you're buying when everybody is concerned, when there's obviously a lot of problems, because that's why things are cheap. It's much easier to buy when everything is great, when everybody is convinced that you can't lose. But, of course, when you do that, you end up paying a high price, because everybody is trying to buy and nobody is selling. Right now, everybody is trying to sell. But I think that what everybody is coveting so highly right now, cash, in particular the U.S. dollar, is the absolute worst place that you could be. by far the worst place that you could be. We should be running from cash. People should be running towards real assets, real something that's going to maintain its value in the face of all this inflation, all this money creation. And I think before too long, people will be shunning cash and looking to buy whatever they can, whatever real assets they can to preserve their wealth, because it's not going to be preserved if it's in cash, particularly if the cash is U.S. dollars. Also, too, real quickly before I go to the phones, there's a lot of news today, a lot of talk in the news about the companies that are getting money from the government, that got money through the TARP, getting bailouts, whether their salaries should be capped. I mean, they're paying big bonuses, they're going on lavish trips or excursions, and they're throwing parties. And, of course, the taxpayers or the politicians are upset that companies are taking taxpayer money and just, having a good time or paying high salaries. And, the whole thing this is a discussion or an argument that shouldn't even be taking place, because the government should have let these companies fail. The government shouldn't have bailed out anybody. And if we hadn't bailed out anybody, then it wouldn't be an issue of how much they're paying or what kind of parties they're throwing, because there wouldn't be any. Either the companies would still be in business and they would be spending their own money, or they would have gone out of business. But instead, the government keeps them in business. And now, unfortunately, if the government's going to maintain their high salaries, even though the companies are losing money, then what incentive do they have to ever make money? I mean, they're just going to be permanent government positions and high-paying government positions at that, even though they're not delivering a service that anybody wants. I mean, we have to impose some discipline on their ability to lavish big paychecks on themselves without any regards to profit, because there's no longer a profit motive in there. Their salary is no longer a function of what they can earn in the market, because if they just can keep losing money every year and just line up for money from the federal government. And obviously, they'll pay themselves as much as they can get away with. But, the other problem is, of course, if they can't pay their executives, more than a certain amount of money, then a lot of these guys will quit and the firms will fail and go bankrupt. Well, fine. We should have just let that happen right off the bat. If that's what's going to happen, fine. But, by propping these companies up, now we've got to support their ability to continue to overpay people. And it also makes it difficult for the industry to restructure, because smaller companies that didn't make all these mistakes, that might have been in a position to hire some of the workers that lost their jobs at some of these bigger firms, now they're not going to get that opportunity because the government is subsidizing their continued employment. And a lot of the smaller firms will never be able to earn enough money to make these huge bonus payments that these other companies can make, not because they're generating any profits, but because they've qualified for government aid. And they take that government aid and they use it to bid up wages, and they make it so that people aren't going to firms where their skills could better be used. And remember, the only way that we're going to get out of this economic mess is to allow a more vibrant economy to be created by private individuals. We need real wealth creation. We need real businesses. We need real factories to be established. And it's not going to happen from the government. The government's not going to do it. We need more resources in the private sector, but we have to let the private sector allocate them. And if the government's propping up these companies and keeping them in business with government money, they're interfering with that process, and they're preventing the economy from adjusting itself in a way that we need to, so that we can have a meaningful prosperity based on productivity. Not just based on debt, not just based on borrowing money and spending it, which is the phony paradigm that is the reason that we're now in the mess that we are, and that it's going to get so much worse because the government doesn't understand this, and that everything the government is doing now and everything the government is going to do is simply going to make the situation much, much worse. Barack Obama, again, was on television today saying that we have to act, we need this gigantic stimulus. If we don't do this, it's going to be a catastrophe. It's going to be, the bottom line is it's going to be bad if the government does nothing. No question about that. But it's going to be much, much worse if the government does what Barack Obama is planning. And it's already going to be worse because we've done some of the things